Hi, everybody. Scott Riley at the Market Update Desk, September 13th. So we got CPI in today. We spent some time this morning, late afternoon, crunching numbers. Wanted to get that out to everybody. So headline CPI it came in at plus 0.6%, slightly higher than the forecast. So that rose year over year inflation from 3.3% to 3.7%. Not completely unexpected because of the replacement cost or values that we had. And we'll kind of go into the reasons why we did actually have higher than initially thought prices. So core CPI, that strips out volatile energy prices. That came in at 0.3% and actually brought us down year over year to 4.3% from 4.7%. So we're making great progress within the core rate. Now, what's interesting is if you look at the last 3 months on the core CPI, annualize that for 12 months, we're actually at an average of 2.4% inflation, just a whisker away from the Fed's target rate of 2%. So we're really making great strides. It's just not being as told in the media and not understanding why one's moving and not the other. So let's look at the details of the report for today. Used car prices, that's been one of the monkeys on our back, came down again 1.2% to a year over year minus 6.6% on used car. So we've seen some good progress on used car prices coming down the last 3 months now. Car insurance, wow, this is a sticker. Went up 2%, this not 0.2%, but 2% month over month. And year over year, auto insurance is up 19%. A lot of people out there know how much I love insurance companies, and this is an example why. 19% year over year. Energy, last month was up 5.6%. It's a big number. Year over year, though, we're down 3.6%. Here's the big one that caused the higher prices than what we normally were thinking of seeing. Gasoline has a lot to go into it. Saudi oil cuts, West Texas crude oil going up, Brent crude oil going up, and speculators moving the gasoline prices and oil prices upwards. So last month over month, gasoline up 10.6%. Oh, that sucks. Year over year, though, we're down 3.3%. Food rose nominally 0.2%, and year over year is up 4.3%. So we're starting to affect the food prices, which thankfully. Airline fares, we had seen 2 months of negative airline fares. This month up 4.9%, but we're down 13% year over year. So we may have passed that great time to buy those airline tickets. Those of you looking for the holidays may want to be looking now. So let's go into the biggest driver of inflation for CPI, and that's shelter costs. We've been talking about the lag effect and where we're going with it. So let's dive into that. Total shelter cost went up by 0.3%, and year over year we dropped from 7.7% to up 7.3%. So we're making continued progress on shelter. Rent was up 0.5%. That came in year over year at 7.8% from where we were 8%. Owner's equivalent rent, that would be if a homeowner needed to, if they sold, what would their expected rent be? That rose by 0.4%. That dropped year over year from 7.7 to 7.3%. And then lodging away from home, which is a big variable and kind of a weird number that's in there, was down 3%. Year over year, we're up 3%. What's all that mean? We're making progress, but because the headline went up this month, it is getting some negative publicity. The mortgage-backed securities and 10-year treasury started out in the negative today. They have come back and started to benefit us. In fact, mortgage-backed securities are up 17 basis points. 10-year is down 1 basis point, and it's down to 4.25. In pre-market, to give you an idea, that 10-year was up to 4.33 when I was watching this morning, and I was getting very concerned. So also in the market, we're seeing the indices. The Dow is down 100, S&P's up 4 points, and the Nasdaq's up 37. Overall, the market has treated this report kind of like we thought. Um, they dove into some of the details more than I even expected, and it didn't give us as big of a negative as I thought might happen. Now tomorrow we're getting the wholesale side to this, the PPI, Producer Price Index. We're waiting on that with bated breath. We'll crunch those numbers probably to a little bit later than normal update, where we can put all those numbers together for you. Um, Bottom line, we're starting to see some improvement, continued improvement. Let's hope that 7, 8 days from now, the Fed reads this information, reads the tea leaves, not where we've been, but where we're going, and gives us a pause or a skip on the interest rates for this month. We are forecasting in a no decision, pause, or skip on rates until we get to the November meeting. Let's hope that all happens. Give me a call, get pre-approved today. Scott Riley at the Market Update Desk and Mortgage One, 616-293-2189.